Your Credit Matters segment, brought to you by rsrdebtfree.com, rsrdebtfree.com. 7 things credit card issuers consider when you apply. Knowing what card issuers could consider takes some of the guesswork out of applying for a credit card. Here are the 7 factors that may affect whether they approve your application. Number 1, your FICO score and credit report, cleanall3.com. Cleanall3.com. Most credit card issuers will request at least one of your credit reports from Equifax, Experian, and TransUnion, and a FICO score based on the report. They use a FICO score to better understand the likelihood that an applicant will miss a credit card payment in the future. Having a higher FICO score can help you qualify for more credit cards and lead to a lower interest rate on your credit card if you're approved. Remember, notice I emphasize FICO score, not a credit score, and it's got to be the right model of FICO. Some will use various models. We use cleanall3.com because that gives you the models that the mortgage world uses. Number 2, the issuer's custom credit scores. 9 out of 10 top lenders use a FICO score, but many large card issuers also create and use custom scoring models. For example, a major credit card issuer might create a custom score for its secured credit cards that are generally for people who are trying to establish or rebuild their credit. And a separate custom score may be used for its premium credit cards. The company's custom score might use an applicant's FICO score as an input in its custom score, along with information from their credit report and application to refine its decision-making process. Number 3, your monthly income, bills, and debt-to-income ratio. Credit card applications will ask about your household income and monthly housing bills. The card issuer can use this information along with information about your credit cards and loans from your credit report to estimate your monthly debt-to-income ratio. Federal law requires the card issuers to check if applicants have enough income or assets to afford the new card's minimum payments. Some card issuers also have minimum income requirements, and they might use your income and debt-to-income ratio to help set your credit card's interest rate and credit limit. Number 4, your relationship with the company. Credit card issuers may also consider your history and current relationship with the company. For example, a loyal customer who has responsibly managed a credit card for years might have an easier time getting approved for a new card. However, someone with an unresolved collection for a past due credit card might be denied automatically. Card issuers may also consider how much credit they've extended you overall. Even if you have an excellent FICO score, the card issuer might deny an application if you have several credit cards from the company. But sometimes you can get approved if you call the issuer and ask to transfer part of your credit limit from an open card to a new card. Number 5, your bank account history. Banks and credit unions may offer credit cards alongside checking and savings accounts. If you have one of these accounts, the company might consider your banking relationship and history. Your bank account history might show that you responsibly manage your money and pay bills that don't appear on your credit reports. Number 6, the company's policies. Many credit card issuers also have policies that can lead to an automatic denial regardless of your income and credit. For example, if you recently opened a card with the issuer, you might not be able to get a second card right away. Or if an issuer enforces a 524 rule, which generally means that they won't approve a credit card application if you've opened 5 or more cards from any issuer in the past 24 months. Number 7, the results of identity and fraud checks. Your credit card application will likely trigger an identity and fraud check. These checks can protect the card issuer from fraudsters and help you from someone trying to open a credit card in your name. If you've completed the application, you hopefully won't run into any trouble with these checks. But you may want to review your credit reports for errors that might cause false alarms. Although card issuers consider many factors, having a strong FICO score can certainly make qualifying for credit cards easier and can lead to cards getting with lower interest rates. That is the Your Credit Matters segment, brought to you by rsrdebtfree.com, rsrdebtfree.com.